As a qualified property investment advisor, I often get approached by clients asking me about investing in property overseas. They've been on a recent vacation and they bring back a brochure telling me about this amazing opportunity they've got in Bali or in Spain or in the UK or in America. And ultimately, I try and drill into the main motivations of investing in those areas. You know, they may have done some preliminary research and found that the property prices have gone very high very quickly, and one would say that that's a very heated market and there's potential risk. So let's use Bali as an example. Let's say, and we have seen property prices grow. Well, we've got political risk and we've also got religious risk in that particular market. If we see another terrorism attack in that market, what happens to the value of property? So we've got to make sure that we understand the risks in the marketplaces we're going in. Let's take Spain as another example. They've got youth unemployment over 20% in most of the cities. So if we're talking about getting a villa on the coast and we're expecting that to give us great returns, well, we saw what happened just after the GFC when we saw an oversupply in that particular accommodation and everyone abandoned their investments and property prices collapse in those particular markets. The UK is a bit more of a sounder market and has some synergies with the Australian market. So one would say getting the pound for investments is potentially not a bad idea, especially after the Brexit that's occurred recently. But it all comes down to understanding that particular market and being a subject matter expert. You don't want to go into these marketplaces if you don't have the knowledge and understanding of the regulations, the tax implications. And there are tax implications both over there and also as you bring your money back through the foreign exchange mechanism here in Australia. And that also brings up the issue of currency risk as well. You've potentially got currency risk where if that currency collapses, well, your investment returns are going to be lower. Now, that currency risk can also work on the upside, is if you're buying into that market when their currency is low and that currency is about to improve, that's also a good thing. But the biggest challenge I think you have when you're looking to invest overseas is what happens if something goes wrong? You know, investing is about solving problems. And the bigger the problem that you solve, potentially the bigger the return. So what I'm really saying is the higher the risk, potentially the higher return, but are you willing to take on all of that risk? Let's say we go into the American market. Now, the American market doesn't have any regulation around property management. In fact, a lot of people who own properties over in America actually self-manage their properties and they collect their own rent. But let's say we find a company that says they're going to do a great job in doing the property management and they start collecting the rent from you. And let's say that money stops hitting your bank account and all of a sudden the tenant's paying the rent into the property manager, but they've done a runner. What do you do next? What happens if something goes wrong? What happens if that property burns down and you're personally liable because your property manager didn't do the right thing? So all of a sudden you've got this warrant for your arrest overseas and you're never going to potentially be able to travel again. Now, they are extreme circumstances, but they're all the factors that you need to consider when you're looking to invest overseas. And that's why, on the whole, most of the advice work we do is about investing in Australia and about diversifying your portfolio around the states as opposed to investing internationally to get the returns that you're looking for. We believe the Australian market has ample opportunity and you can time different markets at the right time to get into those. So it's a really important question. You've got to ask yourself, am I a subject matter expert on buying property in that market? Or if I'm looking to use a subject matter expert, what sort of credentials do they have? What sort of protections do I have around them not running off with my money? You know, and are they working in my best interest? All big important questions, and the tyranny of distance to allow you to solve those problems if something goes wrong is going to be a bigger headache than you want as an investor. Because at the end of the day, investing, whether it be property or anything, from a passive point of view is about making the tough decisions, executing on that investment, and then hopefully watching your returns come back to you. If you're not doing that and you have to do more work, well, that's not true investment. You know, you've basically created a problem for yourself. And so I just hope you get the returns at the end of the day. So I would be saying investing in overseas property, be cautious about what you do and why you're doing it. Thanks for watching.